Stocks hold firm with advances far outstripping losers and mid-caps ruling the roost. IT and metals are big gainers even as utilities drag.
Auto sales are a mixed bag in June, while Escorts reports weakness in the tractor sales. M&M sees double-digit growth in auto sales at 11%. Bajaj Auto rise in single-digit due to weakness in two-wheeler exports.
Walk Hard rides on the high breakpoint cited for its antibiotic drug Xenic, while Orchid Pharma perks up on a distribution deal with Cipla for its developed new drug.
Cochin Shipyard bags an order for 8 vessels from Norway worth 1,100 crore rupees, while Garden Reach Shipbuilders wins a contract to build a tug from Bangladesh. Both stocks rally. Good afternoon, you're watching us here on Halftime Report. It's been over 24 hours, close to 48 hours. We won the T20 World Cup, but the feeling still just hasn't sunk in yet. We're still celebrating. We're celebrating for the nation at CNBC-TV18 as well. It looks like the market's also cheering this win. You love this confetti, right? And especially when it's for the India win. It's been the case for everyone who's an Indian, and even those who didn't watch the match or who's not a big cricket fan like myself. I would just say it was a great moment to see India lift that World Cup. Lift that World Cup indeed. And you know what's even better is that even if it's for technology purposes, even if it's, augmented reality, we have the cup so close right to us here, and this is where Rohit Sharma is. So, I mean, this is as close as it gets, even if it is just technology. So, we're really, really enjoying ourselves out here as a nation, and the joy that these boys have brought to us. But we have a market that's trading. Oh, yes, and it is bringing joy to a lot of bulls today. So, Nifty is the one which is up 100 points right now. Mid-caps, a new record high there. Markets at the day's high. And we do have IT, which is contributing a lot. So, that's been one sector which has definitely been an outperformer. 2% higher on the Nifty IT pack. We have the small caps, which are up 1.4%. The mid-caps, which are up around 0.9%. So it's an overall contribution that we are seeing from across most of the segments of the market as well, and a lot of sectoral movers and a lot of stock-specific action as well. A lot of stock-specific action as well. Since we're talking about cricket, it's a century that the Nifty is hit right now. It's a 98-point move that we're seeing, very close to that century, and that for the Nifty Bank itself, it is a double century. It will be interesting to see what happens to a lot of these sectors and stocks. In particular, I'm looking at Patanjali Foods. Why is that? Because, the stock has been buzzing higher. At the same time, we had the management here on CNBC TV18 a couple of weeks ago saying that they're looking at, merging both the non-food business of Patanjali Ayurved, which is not listed right now, with the current listed entity itself. Were that to happen, there would be value unlocking. And now, if you look at the exchanges, there is an analyst meet which is going to be held tomorrow, 4 p.m. onwards, which will be addressed by Baba Ramdev and the top leadership of the company itself. So I'm sure a lot of questions would be asked around that itself. So as you see, the last 1 month, a 16-17% up move that we've seen. Let's talk about our special segment, Insight Edge. That's the one on our radar because we have with us, realty developer Signature Global that reported a 2,700 crore fundraise via QIP itself. Sonal, tell us more about what the management said. There's so much fundraise happening. I think you've confused the two. So what they've done is gone ahead and sold apartments worth 2,700 crore rupees. But I think we are talking so much about fundraise and block deals. You do tend to get confused. But here the news, of course, is the company has sold 2,700 crore rupees in terms of a launch of Titanium SPR, which is a luxury project for them in Gurugram. And we got to speak to the management as well today, and they sounded very bullish. They went ahead to say that they've sold around 85% of this project already, and this is something which is done in phases right now. So out of the total phase of 17 million square feet in terms of developable area in that particular area, they have launched 2.1 million square feet. The target for FY25 is 10,000 crore rupees in FY25 in terms of pre-sales. Now, just to give you some context, they have done sales of around 7,300 crore rupees in FY24 itself. They will launch 3.5 million square feet in Sector 71 itself, where they have this big land parcel in FY25. And average realization of this Titanium SPR project is 16,000 rupees per square feet. As of March, their net debt was at around 1150 crore rupees, and they did indicate that debt has risen in the past because of a lot of land acquisitions that the company has done.
But for FY25, net debt will be less than 0.5 times of the operating surplus. Now, remember, in realty companies, when you look at the operating surplus or EBITDA, if you look at the P&L, it's very lumpy. So we'll have to watch out for what the absolute debt levels are like for the company, because they will go ahead and buy more land as well. That's the word coming in from the management as well. In fact, we spoke to Rajat Kathuria, where he shared his outlook on the demand trends. Let's listen into that excerpt of the conversation.
Sector 71 is one of the significant geographies for us, micro markets for us. This lies on the southern peripheral road, which is up to a lot of development work by various agencies. So we have about access to about 90 plus acres of land over here, and which will provide us development potential in excess of 17 million square foot. Of that 17 million, we launched about 2.1 million square foot about week 10 days back. The response was very good. We've sold almost 85% plus, the units which we had put on launch. For this particular year, our target is to achieve about 10,000 crores in terms of pre-sales, of which, this project already has contributed about 2,700 odd crores. In Sector 71 per se, we'll have like a sustained supply over, a few years to come. This year, our overall target is to launch about 3.5 million square foot in Sector 71.
All right, that's about Signature Global. Not a fundraise, but raising a lot of money through the sales of their projects already. But let's talk about PVR. That's the one stock which has been surging. It was a great weekend at the movies. And now with the IPL getting done and with all the World Cups, etc., all the near-term sporting action overhang with the election having been done as well, there's a good 4-month runway for a lot of content. Vamakshi joins us to tell us what is on the pipeline and what happened over the weekend with Kalki.
Well, absolutely, Mangalam. Kalki had a blockbuster weekend, and in fact, it's turning out to be a blockbuster trading day for PVR Inox. In fact, it became 2024's highest grossing Indian film in only 3 days. Total net India box office revenue stood at 302 crores as per Nuvama. In fact, the movie managed to garner sales box office collections of nearly 95 crores on day one itself. But apart from this film, the content pipeline looks quite strong. It was quite lackluster for the past 7 months, but now is seeing a good uptick. In fact, in July and August, several Indian films are lined up, which include the likes of Sarfira, Pushpa 2, Stree 2. Hollywood content, which was also impacted mainly on account of the writer's strike. The settlement happened last year, and now we're seeing good content coming in from there as well. Despicable Me 4, Fly Me to the Moon, Deadpool and Wolverine, Transformers 1 are some of the other films that are lined up in the months ahead. But apart from the strong pipeline, there are several other triggers that are lining up for PVR Inox. Ad revenue growth is expected to sustain over the medium term. In fact, the company in the past has said that ad revenue in FY25 will revert back to the pre-COVID absolute level. In fact, they're also having several measures as far as cost control is concerned. They're quite prudent with addition of screens, and they're shutting down unprofitable screens. They're also looking towards debt reduction. Now, their primary goal here is to be a net debt-free company. They also have land parcels worth 300 to 400 odd crores. They will look to monetize that in order to pare down debt. So that bodes well for the counter as well. Now, they're also looking at premiumization of their portfolio. Currently, the premium screens stand at around 14% of their portfolio. They expect to take it to 20%. And premium screens also means better margins for PVR. So given all of these positive factors, a couple of brokerage notes have come in. Nuvama as well as MK both have a buy rating on this counter, with the target price for Nuvama at 1,995 and that for MK at 1,650 per share.
Okay, all right. So people are watching matches, watching movies, going out, eating and traveling as well. A lot's happening. Well, thank you so much, Vamakshi, for joining us with all those details.
I wanted to know if Vamakshi has watched Kalki or not. Vamakshi, are you there with us? Have you watched Kalki yet?
I have not watched Kalki yet. I was occupied with watching the T20 World Cup over the weekend. So
now that has happened, that means there is
weekend.
latent demand for all these movies, right?
And I think Vamakshi will treat all of us for this movie as well.
Okay,
Sure.
fine. I don't know about the movies. I buy the tickets, Vamakshi. Just pay for my popcorn. That's extremely expensive.
Absolutely
done. Okay. All right, we caught you there. It's on record as well. Thank you so much, Vamakshi, for joining us. But the other stocks on our radar, Cochin Shipyard and Garden Reach Shipbuilders are surging in trade on the back of recent news flows. Upasana is here with the details. Upasana.
Thanks so much for that. First up, let me start with Cochin Shipyard. The company sees significant export orders. Udupi Cochin Shipyard, which is a wholly owned subsidiary of the company, secures additional orders from Wilson ASA, Norway. The contract involves designing and building 4 dry cargo vessels with an agreement for 4 or more by September 2024. These will be diesel-electric vessels built for transporting general cargo in European coastal waters, and the project value is around 1100 crores, and it is expected to be completed by September 2028. Mind you, last month the company had indicated that it is expecting very strong traction for export orders, especially from the European region. Next up is Garden Reach Shipbuilders. The export order momentum continues as company backs contract worth $21 million for construction of advanced ocean-going tug for Bangladesh government. And this project will be executed in 24 months. Let us see the recent export order wins that the company has seen last month, that is in June 2024. Company had signed another contract with Bangladesh for delivery of TSH dredger and had also entered into a contract with German company for the delivery of at least 4 multi-purpose cargo vessels with a contract value of almost $54 million. Hence, Garden Reach Shipbuilders will also be in focus on the back of gaining export momentum.
All right, thanks a lot for that. Garden Reach and the others that you're talking about, Cochin Shipyard, Vamakshi, big movers in today's trading session. But it is the first of the month, and that means that the spotlight is on the auto sales for the month of June. Sonia joins in as always with all the details of what's happened so far. Sonia.
Well, thanks a lot for that. You know, this time it's been a rather mixed bag for the auto sector. So let me start with Bajaj Auto, where the numbers were slightly better than what the street was estimating, but it was a muted single-digit growth that Bajaj Auto has seen this time. So total sales growth just up 5%. Domestic sales growth was up 8%, but exports grew just about 1%. Now, if you look at the breakup, right, the three-wheeler segment has been very strong for Bajaj Auto, but they are struggling in two-wheeler exports because some of the markets like Nigeria, Egypt, etc., continue to have struggles of their own, like, for example, the currency devaluation in places like Nigeria, and that has hit the two-wheeler export sales. If you move on, look at the tractor segment. Escorts Kubota continues to see weakness in the month of June. The company says a delayed pickup in the retail season is what has impacted sales this time around. June total sales were down 2.6% year-on-year, while the domestic sales saw a growth of just about 1%. We just saw M&M's numbers as well a while back. Now, the auto sales were strong, actually. An 11% growth is what the company has registered. That includes a 23% growth in the SUV sales for M&M. But the problem once again lies in the tractor sales. The tractor sales growth has been in low single digits, just about 6%. The company says with the retail momentum having picked up, supported by land preparation and an increase in kharif crop sowing, the demand for tractors is likely to remain strong in the coming months. So relatively, you'd have to say a mixed bag for the auto sector this month. Okay, all right, a mixed bag for the auto space. Thank you so much, Sonia, for bringing us up to speed and for that summary as well. We'll do one thing, we'll slip into a short break now. When we come back, we'll connect with K. Ramakrishnan, the MD, South Asia World Panel Division, Kantar, to put focus on FMCG sector. Stay tuned.
Welcome back. You're watching us here on Halftime Report. Okay, there is some news coming in terms of leadership for HDFC Ergo. Appointed Anuj Tyagi as MD and CEO effective July 1. Meanwhile, a lot of these consumer discretionary stocks are doing extremely well. Jubilant Foodworks, we pointed out that, there could be a possibility of things pricing on the positive side for the QSR space, and in that, Jubilant Foodworks brokerage is turning positive as well. That stock's moved to the high point of trade. And Trent is the other one, which continues to move. I mean, any dip on that counter is bought and bought immediately. There was a dip this morning and the stock has moved higher by about 3% from the lows of today's trading session as well. Since we're talking consumption, let's welcome K. Ramakrishnan, who's the MD, South Asia World Panel Division at Kantar. Kantar's recently released their update for the quarter that we're currently in the FMCG space, and they say that there could be an impact this quarter on account of a high base, and they believe that there could be some sort of recovery coming by only from the third quarter of calendar year or the second quarter of FY25. Thanks a lot, Ramki, for joining in. Let's get down with the basics first. In terms of growth, What is it that you witnessed in the first quarter of FY25? If you could break that up, in terms of value, volume, growth in urban and rural. Let's get the basics out first.
Yeah, so we've had a reasonable growth in the first quarter of financial year. However, if you see how rural and urban have been behaving in the last whole year, if you see, urban has been ahead of rural. And for the last 3 quarters, the growth rate at which urban is growing has been flat, but rural has been inching upwards. The worm is moving upwards. So much so that in the first quarter itself, it has kind of overtaken the growth in urban. So rural is growing faster than urban. So the urban slowdown can be a matter of concern because consumption is higher in urban, more number of categories are bought in urban, etc. It's not a slowdown, it's a slowdown of growth. But the green shoot of rural is something that all FMCG players must be very happy about. The green shoots that we see if fundamentals are always right in rural, right? Like whether it's the minimum support price or monsoon or any of those. But however, the consumption has been lagging and now it's going up. But it's still not completely out of the woods. Like you said in your introduction, the Q2 of last year was a very, very heavy quarter in terms of growth. So actually on that base to grow will be difficult. But the rural positivity is what keeps us strongly optimistic about it.
Okay. So Mr. Ramakrishnan, is this a trend you expect to continue for the remainder of the fiscal as well? Rural outperforming, and we do have a lot of triggers in the second quarter, but again, we have a high base. So what's the expectation for the remainder of the fiscal?
So we expect this kind of a muted growth to continue for another quarter for sure, but the last quarter should see some real positivity. I say that with a reason. The reason why the muted growth is more because of the base effect of last year. The second quarter of last financial year was heavy growth. So on the top of that, getting this growth will be difficult, even though we are seeing green shoots. That said, the urban slowdown will probably continue into the quarter, and perhaps we don't even know if it will come back in the last quarter, but rural should turn us around in the last quarter.
Could you put some numbers to it?
Yeah, so we don't project numbers, but at the moment, the rural is faster than urban, but we expect that growth rate, which is in the low single digits, is about 4.5%, etc., to go up to about 6% in the last quarter, which will be a strong growth. And urban, even if it remains the same, the overall FMCG growth will also cross the 5% barrier.
Okay.
In volume terms.
In volume terms. What's the update on the premiumization trajectory? Because we did see that K-shaped recovery. Do you think that is something which could come down now the inflation fear is behind us? Will that be a new trend that we'll see going forward?
So interestingly, value growth was consistently ahead of volume growth for almost 2 years. But if you take on a quarter basis, what's happening is in the recent quarters, the volume growth is actually pincering the value growth, which means that the growth rate of both volume and value are more or less the same at this stage. That said, the K-shaped recovery and the fact that there is some amount of polarization in the market in the sense that the premium categories, or let's say the discretionary categories, let's say like the bottled soft drinks or even snacking to some extent, and some of the personal care products are seeing strong growth in spite of the fact that urban is slowing down and things like that. But these categories, for example, bottled soft drinks is seeing an increased consumption even in rural markets, which means the rural growth and rural consumption is more or less getting equal to the lower SECs in the urban. So that's a good sign for some of these categories. That said, the overall numbers is what I stated earlier, is likely to be in that low muted level in the next quarter and recover in the last.
All right, some categories doing well. So from a bottled soft drink perspective, maybe from a listed standpoint, one should look at something like a Varun Beverages. We did have a brokerage right on Varun Beverages last week as well. CLSA, I believe, did upgrade their estimates on the stock because of good belief of good growth on account of hot summer that we saw this time around. I wanted your thoughts particularly on the impact that increase in telecom tariffs could have on consumption, because at the end of the day, the customer's share of wallet is limited. Inflation has looked like it's abating, or the worst of inflation is behind, but then suddenly they are hit by a 15 to 20% hike in telecom prices. So will that have an impact on consumption? If yes, how much could that be?
That's a very, very valid and pertinent question, Mangalam, in the sense that if you see, we've compared the wallet of a household 6 months back to now. If you see what are the areas in the wallet that have actually seen a jump are the following. One, healthcare expenses. Healthcare, in relation to healthcare per household expenses 6 months back to now, there is an increase. Second, EMIs and cost of financing, cost of buy now, pay later kind of scenario, that has gone up. But telecom has remained constant. It has not gone up in the last 6 months. I mean, if you take a 2 6-month periods, it has not gone up. But interestingly, the amount of money that is spent, the amount of money that of share of the wallet that is spent on telecom is the same whether if the household is urban or rural. So to that extent, telecom plays a very key role in the wallet in the overall scheme of things. Second of all, what's also happening is that the growth rate of the household in terms of telecom expenses is also higher. So given these two factors put together, I think the increase in telecom will have an impact on the overall wallet. And overall wallet, one of the things that could get affected could be the discretionary products, whatever little they are in rural. So it will have an impact. But that said, that should kind of get compensated by the green shoots that we are seeing in the rural space.
Okay. So, you know, with telecom, the other thing that comes is QCom, right? That has been a big part of our shopping criteria for the longest time. How has that been contributing to volumes and value? And what is the expected growth here? Will it continue to be the bigger part? Because now we are seeing that trends are changing.
Yeah. So overall, from a household lens, we look at everything from a household lens. If you look at a household lens and if you look at grocery stroke FMCG as a category, the contribution of entire e-commerce is in low single digits, right? And Q-commerce is a part of it. Yes, the growth rate in Q-commerce is quite sharp, but its ability to swing the needle from an overall FMCG growth perspective is a little limited. So therefore, I won't expect that to change the growth trajectories of FMCG as a whole. But within itself, Q-commerce certainly is seeing growths which are unprecedented in the sense that compared to the rest of e-commerce, it's more than twice or thrice.
All right, twice or thrice. Final question before we let you go then. If you had to, leave us with a couple of big trend calls that you would make, because some of the categories are doing extremely well. Liquid soaps is one of them. You have liquid washes, all of them seeing a big jump. We have, fabric softeners, etc. So some underlying trend where you see green shoots, and these are categories that you would call out for the next couple of years?
Yeah. So like I said, the underlying truth is about first the rural growth. So whatever we are seeing in rural has limited number of categories. But at the same time, in rural households, we are noticing that the premium products or premium categories are making an entry. So to that extent, affordable premiumization, if marketeers pursue that angle more from a rural perspective, I'm sure there is likely to be growth of the premium categories as well. So some of those premium and or discretionary categories include bottled soft drinks, include fabric softeners, include all liquefaction, which are whether it's fabric wash or utensil cleaners or any of those. Liquefaction is a trend that one can definitely watch for, even from a rural perspective in the coming quarters. That is one to be noted. Second, staples are more or less flat. There's no decrease or increase. Edible oils are seeing some amount of stress. Given that during the peak of inflation, there was a heavy price increase in inflation. So in edible oils, to that extent, the consumption of edible oils dropped a bit, but it's coming back to some level, but in edible oils could be under some stress. Personal care, it's always going to be polarized. There is going to be a set of consumers who don't care and who are going to continue to purchase the premium set of products. But the mass in general kind of products are going to be in line with the rest of FMCG. That would kind of sum up my take on the overall FMCG categories. I hope that helps.
That's a great summary, actually. Thank you so much, Mr. Ramakrishnan, for joining us today and talking to us about trends that we're seeing in the FMCG space. And it continues to change in favor of the rural markets for now. It was a pleasure speaking with you. Thank you so much for joining us today.
My pleasure.
Okay, all right. With that, it's time for a break now. Sudeep Shah of SBI Securities will join in with some trading strategies on the other side. So stay tuned for that.
Welcome back. You're watching us here on Halftime Report, and at halftime it looks very good for the market right now. 115 points on the Nifty Bank up 250 points. So look at all the frontline indices. You'll have the Nifty Bank and the mid-cap index come up for you. The mid-cap index is actually doing a shade better than the other frontline indices. So that's something we'll be watching out for. And as we've moved to the higher end of today's trading range so far, the immediate attention goes to earlier record levels, which were hit just a couple of days ago. On the Nifty itself, it was Friday, 24,174 is a record level. And for the Nifty Bank, it's some distance away, 53,181. So those are marks that we will immediately watch as levels to cross if the up move continues. And the key contributors today have to be IT, FMCG and metal. So the IT index is up around 2.5%. Decent traction on a couple of these FMCG heavyweights as well, with the metals index putting in about 0.5% in terms of gains. The one thing that has happened now is that 24,000 looks like an important psychological support for the market. And that's what 24,000 put writers are doing, with a premium of 75 rupees, selling you just below 24,000, around 23,925, 23,950. There would be support for the frontline index. But on the way up, it has to formidably cross the previous record high to see another breakout because of the big traction that we've seen in the markets already. 24,100 call writers are pretty active for a premium of 150 rupees, telling you 24,250 thereabouts is where there could be some sort of congestion. Stocks that are doing well and a lot of long positions being added on them. We have Oracle, Mahanagar Gas and India Mart 2, which has inched off highs but still in the green, has seen a fair amount of open interest activity. So those are a bunch of stocks we'll be watching out for.
Okay, all right. So that is the FNO setup. Sudeep Shah, Head Technical and Derivatives Research, SBI Securities, is joining us on the show now. Sudeep, good afternoon. Thank you so much for joining us. What are the charts suggesting at record, at day's high on the Nifty, record high on the mid-caps?
Good afternoon, Sonal. Good afternoon, Mangalam. Absolutely a fantastic day in the markets now, very close to the record highs once again in case of Nifty now. And in the last few days, we have seen a strong setup, strong momentum being visible in Nifty. First, it was Bank Nifty which supported Nifty, and now we are seeing FMCG as well as Nifty IT also supportive. And Nifty IT now has given a good breakout on the upside. So I feel from a short-term trading perspective as well as from a positional perspective now, 23,950, 24,000 will act as an important support on the downside until the time indices are sustaining above these levels. We could see levels of 24,350, 24,450 on the upside.
All right, and individual stocks, Sudeep, what do you have on your list today?
There are a couple of them. One is from the IT space now. Infosys, if we see, has given a good breakout on the upside now. Nifty IT also has given a good breakout above 36,500, and it's headed up to 38,000 on the upside. So I feel if we want to play this upside in case of Nifty IT, then Infosys is well placed. The last 3-4 weeks, we have seen higher top, higher bottom formation in this name, and as well as this is Infosys is sustaining above all its short to medium term moving averages. So from the current levels, Infosys can be bought with 1,560 as a stop loss and 1,660, 1,680 as a target on the upside. Another stock which I like is L&T Finance. Now, this stock has been consolidating in the last 6-7 sessions between 175 and 185, 186 on the upside. And today we have seen a volume-based breakout here. So from the current levels, I feel L&T Finance can be bought with 184 as a stop loss and 196 as a target on the upside.
All right. Thank you so much, Sudeep, for joining in and giving us your calls on the index as well as individual stocks. It would be surprising if IT didn't come into anyone's chart with the kind of move that one has seen already in a lot of these IT names. But let's slip into a short break. Before we do that, here's something very interesting. Can a small company actually become a big player in India's clean energy boom? See how an SME startup went from biogas to leading the green fuel movement. As SME Champion Awards celebrates the journey of Indian SMEs, here's GPS Renewables' inspiring story, powering India's future with green energy.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Let's talk about Orchid Pharma. The stock has surged 58% in 2024 so far. The company has recently partnered with Cipla to launch an antibiotic drug in India. Manish Dhanuka, the Managing Director of Orchid Pharma, is joining us now. Mr. Dhanuka, good afternoon. Thank you so much for joining us. Well, I wanted to understand by when will you start commercial sales of this particular drug, because you did indicate earlier that by August you had to do some trials and that's when you'll be able to commercialize it. Can you give us a sense of what the timeline is looking like?
Yeah, the product is under production right now, and we are very hopeful that by August or early September, we should be able to have the product in the market.
All right. And this will be only the Indian market that you're talking about, right?
That's correct. Orchid has the rights to launch the product in India, whereas Electra has already started selling the product in Europe. They recently licensed out to a company for South Africa as well as the GCC countries in the Middle East.
Okay.
So how does the scale up happen? I mean, once you launch it in August this year, what's the kind of revenue potential going forward? How does what could the peak sales be here for this business?
So see, we partnered with Cipla. We're very proud that Cipla has accepted this partnership, and both companies wish to follow the antimicrobial stewardship model. So we will be following the route whereby the antibiotic is not misutilized, and we want the molecule to have the longest possible life of effectivity. So in terms of revenue, it would be difficult for me to say, but I'll give you some sense of what this molecule has potential. There are about 20 lakh patients in India in the hospital setting, in the ICUs, who suffer from the CUTI, HAP, and VAP, the indications for which this molecule is approved. And we hope that in next 2 to 4 years, this molecule would be able to address about 5% of such patients.
Okay. So you cannot give us the peak sales or the idea of revenues that you will be making, but if you can explain to us what is the idea of partnership with Cipla? Will there be any revenue share? How will this agreement go about?
Yeah. So Cipla, as you know, is one of the widest reached amongst the critical care hospitals in India. So they would be selling it through their network. In addition to that, Orchid Pharma would be selling it. We are starting our new division called Antimicrobial Solutions. And we have set up a small team of our own medical representatives and sales representatives who will work with various hospitals to sell this product along with other antibiotics. The objective of this division is basically to follow the antimicrobial stewardship model, make the doctors aware about the current antimicrobial resistance patterns, and help them follow the empirical regime in a more scientific manner.
So what we are trying to understand is, say for 100 rupee worth drug that is sold in the market, how much comes to you, how much comes to Cipla? What are the sharing parameters here in the partnership?
Yeah, so Orchid Pharma would be supplying the vials to Cipla. So there is a model of transfer price plus some royalty based on sales, which would be based on various milestones.
You would be at liberty to share some of those, or is that confidential?
I'm afraid I would not be in that position.
Okay. You know, there's a note by Systematics which says the drug should be able to reach sales of 200 crore rupees in India itself. How much of that would be in your kitty, Mr. Dhanuka?
So that is their estimate, actually.
Yeah.
We definitely hope we can achieve that sales target. But that sales would be the combined of Cipla as well as Orchid.
Okay, but that is the peak sales for a financial year. That is the general assumption. And you think that is a doable number?
In 2 years' time, I would say, 2.5 years. You see, it takes time to educate the doctor, medical community about the new molecule. So I'd say we will have some time to, make the doctors aware about the exact usage pattern and its efficacy. After that, we hope that it will pick up after 6 months.
All right, and finally, before we let you go, no change to your 15 to 20% growth target for the next 3 to 4 years that you had given us last time with 35% plus EBITDA CAGR, right?
We feel we should be able to achieve that.
Take that point. Thank you so much, Mr. Dhanuka, for joining in and giving us an update on this particular development for the company alongside the growth for the near future as well. Take a short break, come back, get you more on the markets and a lot of individual stocks. Welcome back. Two stocks on our radar which are buzzing around over the last few minutes. Religare is one of them, up 6% with huge volumes. There was a large trade. So participants of that large trade would be extremely crucial to track once the data releases this evening. What the Berman family has done or whether Berman family has participated in this or not is one of the questions that we'll get an answer to this evening. So, just pull up Religare, that's up around 6.5%, and doing that so with huge volumes on account of that large trade. The other one is Rane Holdings, up around 20%, locked in that circuit ever since the company announced the acquisition of 51% stake in the joint venture that it had with NSK. And they already held about 49%. Now that has gone up to 50%. With that, that business has become their wholly owned subsidiary. They will be paying close to around 175 odd crores for this. So that also does well for this business. So those are a couple of stocks which are buzzing around. But the other one which is also surging is Wockhardt. The company has announced the successful use of WCK-5222 to treat a cancer patient in the US. Ekta joined or caught up with Habil Khorakiwala, the chairman of the company, to know more about this.
Zenic, which is 5222, it's a brand name. I believe it has, most importantly, it saves life. There is no antibiotic here today or likely to be there which will deal with resistance organism. And in India, the incidence of antibiotic resistance organism which is very conservatively done, is about 750,000 patients. And this drug is likely to, it is being priced comparative drug in US market for a treatment about $15,000. And we intend to market this product in India at a heavy discount of 85 to 90%. And with that, our approach in Indian context is how do we make this drug accessible to larger number of patients in terms of affordability, in terms of its usage. So that is how we would be roughly pricing the product. And we believe there would be extensive market.
Can you tell us about, for example, when do you expect an India commercialization of the drug, and when do you expect a global commercialization of WCK-5222?
We expect India commercialization sometime early calendar year 25. That is FY26. More or less, we will have a full year commercialization. The emerging market commercialization would be another 12 to 18 months later on. In the Western commercialization, we expect sometime on later part of 26.
Out-licensing opportunities for this drug?
Yeah, we have thought through this, and what we thought that we should monetize the outsourced licensing for the Western market, where 90% of monetization value is available. So that is what we would do. We'll go to a global pharma companies and monetize it once phase 3 clinical trial is done. Whereas in India and emerging market, we intend to market ourselves for two reasons. One, that we have a whole portfolio of new drugs available. Second, our objective is to make drug accessible and affordable. And that is a kind of, you can say, social call along with what we have done. And I thought unless you can make drug accessible and save lives, that is a very important part of it.
You raised funds via QIP as well recently. What is it going to be utilized for? How much is going to go back into your R&D program? How much of it is going to be utilized for reduction of debt?
Let's put it differently. About 40 to 50% we will utilize this for the research program. Partly we will need for our operating working capital. And whatever debt is due as and when, we will pay on time.
When it comes to the US business, you're now only looking at contract manufacturing, or are you going to look at probably any kind of long-term remediation or, manufacturing and resupplying to the US?
See, US market, we have de-emphasized as a part of our long-term strategy. Mainly because we don't have a critical mass. We are doing out-licensing. That we will continue what we are doing. We are not going to invest significantly in research as far as US market is concerned. Our focus would, in addition to new drugs portfolio, would be in biologicals or insulins, new insulins, other diabetic product. That we would be focusing on it, and we would be available in all biosimilar space in next 3 to 4 years with whatever is getting off the patent in India and emerging market.
GLP-1?
GLP-1 is one of those areas, but we are also certainly looking at it. Technology is in a similar space.
All right, that's the commentary coming in from Walkhard. The stock up 20% after that 10% rally that we saw on Friday itself. With that, we'll slip into a break. On the other side, Manisha Gupta joins in with former Agricultural Secretary Siraj Hussain. Stay tuned for that conversation.
Welcome back, and joining us now on the show is former Agricultural Secretary Siraj Hussain. Mr. Hussain, thank you so much for joining us. Well, June has ended with below normal monsoons. I have the latest numbers until 28th of June, and the monsoon was 14% below normal. July and August, while are expected to be on the stronger side, I mean, at least that is what the IMD tells us, that we have La Nina now, which is going to be supportive. I want your sense on the initial sowing numbers as well until 28th of June, where we're looking at paddy unchanged, but we also are looking at some concerns when it comes to crops like perhaps sugarcane slightly. Oilseeds has seen a gain there, but coarse cereals have seen a bit of a decline coming in. How are you looking at all of these numbers?
Actually, Manisha, the monsoon in the month of June has been rather good, I would say, because the northwest states of India received only 78 millimeters of rainfall in the month of June. The major amount of rains which come in the month of June is in South Peninsula, 161 millimeters, and Central India, 170 millimeters. And the good news is that in the Southern Peninsula, the rainfall was 14% more than the normal rainfall, so, which means that the sowing of pulses, etc., in rain-fed regions of the south would be taking place quite normally. In Central India, of course, there is a 14% rainfall, but I think that is not too much a cause of worry, because that will be made up as we progress into July. In Northwest India, most of the area in Punjab, Haryana, Western UP is irrigated, and the nurseries would be prepared with the help of underground water. So as far as the overall scenario is concerned, I think there should be no reason to worry.
All right. So this is about monsoon. Now let's come to the pricing part of it, Mr. Hussain. And we do understand that pulses is a bit of a concern. And as you said, the number is slightly higher than last year, and that shows into the numbers as well. When it comes to oil seeds, we are looking at a jump here as well. Markets do believe that cotton could lose some area. You could see maize perhaps gain some. Pulses, of course, is quite supportive as well. When you look at the numbers and the market anticipation, what is from the on ground that you're picking up in sense of favoritism to certain crops?
See, in the absence of futures market, the farmers have no clue as to what price they can expect to receive when they harvest their crop in October and November. Maize has gained in the last few months because a lot of maize is now going into ethanol, which is not a good policy in my view. And as a result of that, we are now forced to import maize under TRQ from Myanmar and other countries. And I understand that the prices which are being paid by the poultry industry are higher, which will ultimately show up in the prices of poultry products, and which will also show in food inflation figures. So I think the farmers would go by what happened to their crop last year, and on the basis of that, they will decide rather than any indication of future prices in October, November.
Cotton has been a bit of a concern as well. The initial numbers do show better than what we did in the last year, but speaking to various farmers and FPOs, we do understand that there is shortage of seed, one, and two, the quality of seed also is on the poorer side. And then, of course, we've seen very, very volatile previous year in sense of cotton. Do you see concerns there?
I think the area under cotton in Maharashtra has traditionally grown cotton. So I do not see them moving to other crops in a very large number. Vidarbha, for example, and other areas of Maharashtra, they will continue to grow cotton. Similarly, in Madhya Pradesh, they will continue to grow cotton. I do not see much shortfall in the cotton area, but if the government is actually able to implement the announcements which have been made by the ministers that we will procure all the pulses produced by the farmers, then I think the farmers will be incentivized to grow pulses. However, I do not think it will be possible for any government to procure the entire production.
A bit of a decline that we are seeing in coarse cereals as a sense of number, would you say is too early days, or do you think that the fight between land in various crops could lead to some decline when it comes to coarse cereals? I mean, that has been a bit of a concern. We've been looking at those consumption numbers as well, which I know you've been writing about as well.
Actually, if we see the data of the last few years, the area under coarse grains has been going down, despite very attractive MSPs announced by the government and some pickup in the consumption of coarse cereals by the well-off sections of society. So I do not think that farmers will be incentivized to grow, other than maize. Maize, I think, may see a higher number because of the good prices received in the last few months. Of course, when the crop actually comes to the market, what will happen? Because that will also depend on what is the import duty tariff at that point of time.
A very quick one, Mr. Hussain, and while of course most sectors are now talking about on what to expect from budget, but we've seen what's happened with the stock limits that have come in wheat and some of these pulses, and edible oil is asking for that duty differential to be set right as well. How would you look at, one, the duty part of it all?
you could imagine that duty on certain imported commodities needs to go up. The edible oils, for example, the duty on palm oil is only 5.5%. Similarly, the duty on other edible oils is also very low, which caused depression in the prices of mustard. When the mustard crop, Rabi crop, was harvested and it started coming to the market in February, March, April. So now is the time for farmers to sow soybean. If they get a signal that government will continue to import edible oils at a cheap rate, then it is quite possible that they may prefer other crops. Now, the thing is that these inflation numbers do not correspond with the actual production numbers. And Jan Rees and Harish Damodran have written about it. The consumption of cereals, for example, is about 305 million tons. The consumption is in the range of 275 to 280 million tons. The exports are restricted, highly restricted, banned in case of wheat and restricted in case of rice. And still we saw double-digit inflation in rice. So something is missing somewhere. I have requested Niti Aayog to issue a clarification and tell the country as to what is the reason for high inflation when the production is more than the consumption and the exports are banned.
And still the inflation is on the higher side. Well, yes, there are some things, there are some numbers that are absolutely not making sense. So if you've written to Niti Aayog, that is a clarification we would also be waiting for. Thank you, Mr. Hussain, as always, for joining us and making sense of a lot of those numbers. But with that, that's all the time we have on the show. Business Lunch will take all the action forward.